So, and if I can just start right away by introducing myself, my name is Dr. Joshua Aura. All right. I work for two organizations. I work for Aura and Company, which is a firm of certified public accountants based at Haven Port at Westlands. And I happen to be the managing partner. Over here, what do? We do external audit, we do internal audit, we do taxation, we have an advisory. And then I also work for RCM College, where I happen to be the principal, right? Don't ask me how I'm able to juggle all those balls. I'm quite talented. I mean, there's no ball that I'm leaving down. I'm able to work with them up there in the air very, very well. Great. So why are we here today? We are here to sharpen our practical skills on what we call audit and assurance. If you remember very well, yesterday we started talking on something very, very important. Somebody who attended, do we have anybody who attended our yesterday's class? Yesterday's class for practical audit. It was also at lunch hour. If you attended, then you must be remembering that we spoke about analytical procedures. Analytical procedures, we have to know them. We as experts of what here, experts in this audit and assurance. So today I would want us to go a notch higher and discuss what we call audit strategy vis-a-vis what here audit plan. Audit strategy vis-a-vis audit plan. So many people confuse the two, audit strategy and audit plan. What is the difference? So you'll allow me to share the handout. I realized yesterday I promised to share the handout, and I never shared. So I think the best is to share the handout here live, because it is now or never. It is now or never. If I don't share it now, chances are we shall be able to forget, which will be very, very bad. Our idea is to empower all our students at RCM, to empower all our students at Aura and Core who are doing practical auditing, practical tax, practical accounting with us, so that whenever they go out there, they get to shine. They get to shine. All right. I'm just getting away of attaching this handout. It'll be very important. We just get to define it, to put it here once and for all. And I'm so happy because 90% of the clients you are getting in audit, in taxation, advisory, are recommended to us by our students. Really, that is a great thing. Yeah. So thank you very much. So whenever you hear of people who have got tax issues, many other issues that need an accountant, do not hesitate recommending us. We cannot let you down. All right. Now remember, when you're learning audit, because this is something we love doing, you don't need to be very serious. Don't be very serious. You'll get like a student right now who has a paper, pen and a paper. No, don't be very serious. Actually, what I normally tell this is not advanced financial management. This is audit. Here we are here to do stories. We are here to enjoy ourselves, right? After all, notes I've shared with you. So there is nothing like being very serious. No, what I would want is an engagement where you talk briefly, you ask questions, I respond. I'll also be able to ask you questions by the end of the session. So we end up having a lively conversation, So when you're eating your ugali, don't hesitate. So long as you are eating ugali with kijiko, isn't it? Yeah. You do your other things as you give me your ears. That is the most important thing, ladies and gentlemen. Whenever we talk of audit strategy versus audit plan, one thing you're supposed to know is that a strategy is superior. All right. A strategy is superior. Just like how you'll get companies talking of what year, a strategic plan up to year 2030. Yeah, most companies do 5 years strategic plan, very well bound and put down. Strategic plans are normally done by the board. They're normally done at the board level, those strategic plans. And then, of course, now the strategic plan will now go down to the CEO and the other managers for purpose of what year? Implementation. For purpose of implementation. So whenever they're implementing, they'll always be looking at what does the strategy say? What are we supposed to be doing here? The same case in audit language. If, for example, today we were to get some client, we have gotten, for example, Bamburi, all right, Bamburi Cement to audit them. At the very planning stage, of course, ladies and gentlemen, we really have to plan and look ahead. I mean, what are we expected to do? All right. So in this case here at partner level, like at RS, or rather Aura and Co, we are 2 partners, right? So we have CPM Adede and then myself. So we sit down. We look at the overall picture of this audit. It's just a normal discussion. What do we expect? All right. And then, of course, now we document that. So whenever we talk over an audit strategy, always think about what are the overall plan. All right. The overall high level. So I'm sharing some document here with you, ladies and gentlemen. Already I've shared it with you. You must be having it there. So, ladies and gentlemen, please listen. And I'm so happy because I can see now we are 50 something. We can be 100, you know. We can be 100 plus. All right. So audit strategy is like a big picture of an overall approach to how an audit will be done. It sets the scope, timing, and direction of the audit. So it sets the scope. What are we expected to do? What shall we be doing by this time? High level. It sets the scope, timing, and direction of the audit. Think of it as making a roadmap for your journey. Yeah, I want to go to Mombasa. Deciding where you need to go, what tools you will use, and how much time it might take. Yeah, going to Mombasa, 8 hours on the road, blah, 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 blah. Which areas would I want to visit when I'm down there? So imagine you are auditing a small bakery. The strategy could be to focus on areas, the areas that I would want to focus on. You know, bakery, they're doing cash business, like cash handling, inventory, and employee payments, because those might be more risky or more important to the business. Please listen. Audit plan is a more detailed step-by-step guide of how the audit will be carried out. It is about how the strategy will be implemented. It's like breaking down your trip into specific tasks with deadlines and the specific things to do at each stage. Ladies and gentlemen, audit strategy is the bigger picture. It is the overall approach. Yeah. We share the document for yesterday. I'll be able to trace it and share it here. So this is big up there, being done at top management level, audit strategy. And then, of course, like now at Aura and Co, whenever it comes to the audit plan, basically, we are giving this now to the one partner who will be the engagement partner. So the engagement partner, together with the audit manager, will be able to sit down and then they'll be able to come and give us an audit plan. So the audit plan gives us now specifics. It tells us, for example, like if it's inventory, who will be in charge of inventory count? Which days shall we be able to do this? All right. I mean, and many, many things, whenever we talk of audit plan, you're going into specifics here. We want you to be very specific. I will visit Mombasa. I will go to this particular area on this day. I'll be doing this kind of shopping. Now you go into specifics here. Please listen. So I've given you a small example here for the bakery. Yeah. So your plan might look like this, something simple. Week number 1, check the cash register and receipts to ensure all sales are recorded. Week number 2, review inventory records to make sure they match the actual products in the store. Week number 3, verify employee payments to confirm that they are correct and they follow payroll rules. Now you can see now I'm going to specifics because this is a plan. Now let me go to example 2 now, which will be actually more practical. I know this is quite theoretical, the first one that we've looked at. So basically, the audit plan breaks down the tasks, methods, and the timelines into actionable steps. Define key audit areas. That is the first thing. So define key audit areas. So based on the strategy, the audit plan will focus on the following key areas. For example, revenue. Examine how revenue is recorded to ensure it's accurate. Check sales records, any contracts here, and receivables. This is quite a risky area. Revenue is not a risky area. Expenses. Review expenses, including payroll, supplier payments, etc. 3, inventory. Verify that inventory is properly counted and recorded. You can count stock and compare with records. Then we have something on internal controls. I'm just giving you examples, and then you'll be able to see us tying down the races in a way that everybody will be very happy. Check if internal controls, like segregation of duties and access control, are effective. So that is the key audit areas. Then now we have the exact audit procedures. Which procedures am I going to put in place to ensure that we have all these things tied down? So audit procedures, we have substantive testing. This involves testing transactions to see if they are correctly reported. For example, test the revenue by confirming a sample of sales transactions. Control testing, evaluate the effectiveness of internal controls. For example, check if the process for authorizing payments is followed correctly. So for example, if it is at Aura and Core, even at RCM, the accountant has to initiate a payment here. There must be those vouchers, which in this case here must be properly filled and authorized. So, we have that down, all right, as our concept here, the basic steps that you have to follow before a check has been signed. It's detailed down as a control, but are they being followed? So as an auditor, I would want to do the tests of controls. Very, very important. And then we have analytical procedures. I told you yesterday what analytical procedures are and what normally happens. So look at financial trends and compare them to industry norms to see if there are any unusual fluctuations. Then we have our timeline schedule. Week number 1, planning and risk assessment. So meet with the client management to understand their processes and the internal controls. As you understand your client and of course their processes, you'll be able to identify key risks, because I told you from the very beginning, ladies and gentlemen, it will be very, very important for you to always be looking at the analytical procedures at the planning stage. When you're looking at that bigger picture, when you have been able, ladies and gentlemen, to take the financial statements, you've calculated ratios, and you've taken these ratios and all the financial statements to Power BI. So Power BI will be able to help you identify the key risk areas. Because, Power BI will be able to give you those graphs. You'll be able to see like the gross profit margin last year, it was what year? It was 10%. This year, gross profit margin has gone, in this case here, for example, to 5%. Look at that drop. That's a key risk area. That's a risky area. It's a danger area. So I would want to do further investigations being guided by professional skepticism to be able to gather sufficient, appropriate audit evidence. What happened to gross profit margin, especially when you realize sales is growing and then gross profit margin is going down, then there is a problem. There is a big problem there. Because it means that there is a problem with cost of sales. And when there is a problem with the cost of sales, there must be a problem with what your inventory. So I'd want to check the inventories, all right, inventory days like that. Once I realize inventory days are going up, then as an auditor, I would want lots of working papers. Is it that, for example, these guys bought lots of units which are in warehouses and they're not doing aggressive marketing? If their goods are not moving as such, do we have a risk of some items perishing or even becoming obsolete in this company? And the moment I see the risk of obsolescence is high, then I'll be able to see whether they're applying IAS2 inventory. Because remember, under IAS2, inventory should be captured at cost or net realizable value, whichever is lower. Once you realize there is a slowdown in inventory, chances are when it comes to them now selling this old stock, they'll not be able to fetch a very good price outside there. So once I realize, ladies and gentlemen, that inventory stocks are going up and up and up, then I have to see that's a risky area. All right. So we continue, ladies and gentlemen, here, and I'm so happy because I can see now we are 72. We have exceeded our yesterday's number, which is very, very good. How I wish we can even exceed it by double. Yesterday was 60. Now we should be 120. We shall reach there. Great. And then, of course, if we reach 120, I'll be able to buy each one of you something, right? However small. I'll be able to buy each one of you something if we reach 120. All right. So week number 1 is just for our planning and risk assessment. We are looking at the financial statements. We are computing those ratios here to be able to be guided, like which areas are danger zones. So and remember, when you are assessing for these risks, if you're using ratio analysis, you must give us profitability ratios, give us liquidity ratios to try to identify whether there is something wrong. All right. And then, of course, as you're planning, you're comparing your actuals versus what here, your budgets, to be able to see whether, I mean, that's how, you know, for example, when the budget says that our sales will be 50 million, that's our last year's budget, that our sales was to be 50 million. And then you give me your actual income statement showing that sales is only actually 10 million. Look at that gap. Whenever I'm doing my risk assessment, ladies and gentlemen, I would need a variances report. A variances report, I'll be able to put actuals here versus what here versus my standards here. Actuals versus my budgets here. And then I have a column for variances. And then I'll be looking at materiality. All right, materiality. So she'll be able to discuss materiality more. But for now, I'm just going to be very, very brief because this is just a lunch hour session. So week number 2, then I start now collecting data. I go to the field. So week 2 to 3, field work. Perform substantive tests on transactions and balances. And when you talk of you performing substantive tests on transactions and balances, I always want you to remember A, E, O, U. We have A, E, O, U. A, E, O, U. Yesterday, there is somebody who was able to write for me the meaning of each of these initials in this acronym. It really saved my time, which was very good. So when you're performing, to be able in the field now, to be able to collect sufficient, appropriate audit evidence, analytical procedures, compute ratios again, observe trends. A stands for inquiries and third-party confirmations. Yeah, remember in this case, here, inquiries will always start from internally here. I will in this case here talk to the managers, call them, go to the offices. I mean, why is this different? How comes this gross profit margin is like this? It tells you so many things. And then you tell them in auditing, we always believe in what here? We always believe in written document. Give us a document. Even if it's an email, drop an email. We like those correspondences to be hard correspondences. No things that later on I will come to you and then you say, I never said this and this. No. We want what we call management representations. All right. Then we have in this case here, this I. I stands for what? Remember now you are on the field. Field doesn't mean like you are, no, you can also be, you are working. Now auditing has begun. Substantive procedures. So I is inspection, O is observation, U is recalculation. I'll also use, some of these substantive procedures, I can use them to test whether controls are working. Yeah, for example, when I come to your company and then you tell me that depreciation is 10 million, no problem. Then I'll tell you, hey, give me the property, plant, and the equipment movement register. Tell me your rate of depreciation. Tell me your policies like this. And then I'll recalculate. Remember, U stands for recalculate. Yours is 10 million, have recalculated mine to 9 million point something. So that difference is small. I take your figure. Whenever differences are very small, whenever differences are in materials, I'll always work with what year? Your figures. I'll always work with your figures. Because in auditing, again, most importantly, is also about having some thick skin. We don't want immaterial things, in this case, to give us blood pressure. If something is immaterial, then, there's no problem. That will not have even any effect on my audit opinion. But once something is material, that's why we have to set materiality levels. Is it 2% of revenue? We have to set materiality levels ourselves. For us to start in this case, jumping up and about, looking for more information, it will be very important for me to get those thresholds. But once this exceeds this, now this is serious. The directors have to amend the financial statement. If they don't amend the financial statements, then I will qualify my opinion. I'll come and say, RCM College, perfect. I will say in this case here, except for depreciation, which was misstated by this amount, the financial statements of RCM College portray a true and a fair view. They portray a true and that's the qualification. All right. But again, remember, when you have an error, it could be one or more errors. There is something you can do. And then you have, in this case here, in these financial statements, most of the items in the financial statements being affected. You have an error in sales, automatically, if it's material, you'll have an error in receivables. All right. So if you have got errors touching, it's just like cancer. Cancer, for example, when it is at stage 1, it is still localized. Sorry to use a bad example. If it's colon cancer, it's still in the colon. But once it goes to stage 2, it has started moving. By the time it is reaching stage 4, it becomes what we call pervasive. Pervasive means what is affecting, like all the areas of the financial state. When it's pervasive means very big. It means that myself now as an auditor, I can only give an adverse opinion. I can only give an adverse opinion and say that the financial statements of RCM College do not portray a true and a fair view. So pervasive, very, very important. I would want you to confirm and tell me, ladies and gentlemen, whether we are together. Are you following what Mwalimu is saying? Really, I also don't want to become too much. Great. Then let me continue. Great. They're following. Great. Thank you so much. So week number 2, fieldwork, perform substantive tests, evaluate internal controls, confirm any external data like bank statements, contracts. If possible, you can also talk to who? For example, the customers. You do what we call circularization of the receivables. Then week 4, we have your final review and reporting. So analyze the audit findings. Now remember, now this comes the engagement partner. Yeah, analyze the audit findings, prepare and discuss audit findings with management. You must go back to management. We've seen, ladies and gentlemen, like, there are people who are coming for training here, this practical auditing, and they're saying, we have a very good approach. Because we don't want a situation where you will get, in this case here, you have come up with your findings, and then you start like running all over. You want even to go to the media saying that this guy is, the opinion is advanced. No, there is nothing that is that red. There is nothing that is that serious. Once you have gotten your findings, it's always very important for you to give the management of XYZ, the management that you are auditing, give them an opportunity to respond. Even advise them, tell them that if you do this change, if you make this change, then, ladies and gentlemen, we shall not have an issue. We shall go ahead and do what here? We shall go ahead and issue you an unqualified opinion if you make changes. You must give them a list of the things that you would wish to change with facts. Tell them according to IFRS 5, according to IFRS 10, consolidations, there is a problem with how you computed goodwill. If they change, we sit down. At times, like I've seen, ladies and gentlemen, where we normally have what we call differences between us and most management, it is on this going concern issue, you will get most of these businesses here, they are preparing their financial statements on a going concern basis. The basis is going concern. They're assuming that this business will be with them forever. At least over 12 months. Going concern. But when I come to do the going concern tests, when I look at things happening, I'm able to see imminent danger. I'm able to see something that is going to bring these people to their knees. So then I recommend to them, I tell them, because I've seen you have a very serious court case. I've seen you are a hotel. And this hotel, of course, we can see lots of pressure coming to you from the Airbnbs. I've seen in hotels like, for example, Hilton, which were at your level closing shop. So I tell them, the way I'm seeing this thing, please prepare your financial statements on a breakup basis. If they accept, and then they make that drastic change, many of them will not accept. If they accept and they make that drastic change, then automatically, then they prepare their financial statements on the basis of what year? Financial statements on the basis of that the company will no longer be there. The company will break up in the near future. So they do their financial statements on a break-up basis. What I'm going to do is simply to give them an unqualified report. And because they would have reported going concern issue, remember now I must introduce a new section in my audit opinion. All right. Because now I must have, we have what we call emphasis of matter paragraph, EOM, where I'll come and say, as per the directors, blah, 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 I'm emphasizing this as their auditor. But remember now, going concern is never put under emphasis of matter. That was the old ISA. In the old ISA, we used to put that under emphasis of matter paragraph. Nowadays, we have what we call MURG. All right. We shall be able to introduce a new section where we talk about the uncertainties regarding what year going concern. Uncertainties regarding what you're going concern, where I just do like one paragraph to bring it to the attention of the stakeholders that, hey, things are not very good. Unfortunately, the directors have been able to accept and they have been able to follow this concept of break-up basis here in preparing their financial statements. So they have told us the truth. Whatever assets they have there, they are fairly valued. All right. So I'll be able to introduce this section of going concern. This going concern, does it apply to projects? Yes. For example, ladies and gentlemen, in this case here, if you're working for USAID, yeah, we don't know how Trump is going to do things. If I have a client in this case here who is being sponsored by USAID, I will not allow them to prepare their financial statements on a going concern basis. There are so many uncertainties hovering around. I would want them to make an assumption that, hey, things are breaking up. Yeah, and if they break up, how much will I be able to get if I sell these vehicles today, if I sell this building today? Those are the figures I want to see in their PPE. Thank you very much for that question. So we continue here. And I'm almost finishing. And as I finish, today I'm with CPM Adede, my partner here at Aura & Co, that I would want to give like 5 minutes to just simply summarize all that I've said. But before I give him the mic, so we have here, prepare and discuss audit findings with management, write the audit report and issue the final opinion. And of course, final opinion will be called upon to go and read this in the AGM. So the audit strategy is a big picture approach. And the audit plan is the detailed steps that make sure everything is covered. In short, ladies and gentlemen, the strategy says, how are we going to tackle the audit? How are we going to tackle the audit? The plan says, what exactly will we do? When and how? When and how? So I've given you an audit plan. Yeah. This is how we prepare it practically, although this is just a sample. Yeah. You'll have in this case, the audit plan. This is under Aura & Co. So audit plan for XYZ company. You must have a column for task. What objective do you want to accomplish with this task? Who is the responsible, the engagement partner? Time frame. Very, very important. All right. Like, for example, the very first one is the initial meeting. You must have what we call an entry meeting. Yeah, where you discuss so many things. You'll be able to get in this case here, for example, the company's overall, organizational structure, where you know who reports to who, what is supposed to be happening, so many things. What are your internal controls? They give you their manuals, etc. And then you start now working. So I expect you guys to go and look at this document, the risk assessment, identify high risky areas like revenue inventory, etc. So I hope you guys have been able to follow what I've said here. But before we break, I have a friend of mine here who will be able to. Madede, I can't see the name you're using here online. Yeah, Job, yes, great. Please unmute. Yeah, continue.
All right, thank you, Dr. Thank you, Dr. so much. That is profound. I've learned a lot from what you have explained. Ladies and gentlemen, I will not add anything on what Dr. has said. He has exhausted and even talked more than I would have been able to talk. Now you can imagine that everything Dr. Aura has explained to us today, these are the things that we are teaching practically in the office. These are the things that we are teaching practically online. So our 3 months course that is tailored for practical training is now to work with us practically in these things. We use our clients that we are auditing. We use our clients that we are doing accounts for. We use our clients that we are doing tax for. And so such an approach gives us an opportunity to be able to work with our students online and practically at our Harvard Court to see how these things are done. As Dr. has emphasized about the audit strategy, the audit plan, now when we are doing practical audit, we now practically do these things in the office so that we internalize them. We can see how the strategy looks like and how it's different from the plan and how the plan is developed by the manager. I mean, we build people who now become practical consultants, practical accountants, practical auditors, and practical tax experts. Take this opportunity and be part of the team that will be enrolling for the next cohort. Thank you so much.
All right. I mean, that's great, CPA job. Now, the most important thing, ladies and gentlemen, you're supposed to know is how much you're charging for this practical audit. So practical audit, you pay 10,000. Practical accounting, you pay 10,000. Practical tax, you pay 10,000. All right. But now there is something that you need to know. If you pay for audit 10,000, we teach you tax for free. If you pay for accounting, we teach you tax for free. All right. So basically, let me simplify this. Audit and tax, 10,000. Then we have accounting and tax, 10,000. And then if you want to pay for all of them, that is accounting, taxation, auditing, you pay 16,000. You pay 16,000. It's for 3 months. Now, the first cohort that we did, we had about 30 students who are doing the 3. 30 students, and we have employed 3 of them. Yeah, we have employed 3 of them. So we shall also be picking the very best. I mean, I'm not saying that the others were not very, very good. Some of them are working elsewhere, but at least these young men and ladies around, I mean, who are really serious with their learning, once we get more clients here and there, we shall retain them on a full-time basis. So then if you're interested in joining us for the practical, actually, if these guys who joined our office here, if they're able to put their camera, I don't know whether they're around here, can they put up their hands? It's good they see that we are together in this office here at Westlands. If you put up your hands, these guys here, I know there is a lady called Viola. We have Dennis. How have they saved themselves here? No, it's not Dennis Mutinda. Anyway, I'll be able to also present them to you. It's important here. So thank you so much. If you're willing to join us, yeah, I can see them here. They're here. Great. Great. I can see they're here. I've stopped the video in a bad way. Are you able to show your video again? Sorry for that. Show your video again. Sorry for that. Are they able to put it on again? They say something, okay, but I can't see them now. RCM Online. Yeah, they're here. Hello. Now I can see your microphone is on. Please go ahead and talk. I can't hear them. We shall be able to do this in a better way in our tomorrow's lunchtime session. Yeah, so ladies and gentlemen, if you want to do a practical audit, call us today. Our number is 0769 111 000. 0769 111 000. From other class, okay? Yeah, let me just send them here. 0769 111 000. That is for the company, Aura and the company auditing. But if you want for RCM, you want to join our CPA classes, you know our usual number, 0719 525,000. 0719 525,000. Great. I hope the presentation has been helpful, and we really hope to see you in our classes from tomorrow. Thank you and bye. Bye.